Prop firms have been an absolute game changer ever since they entered the trading market. But there's different ways to capitalize as much as you can off of prop firms. Different people, they have different strategies on how they can make the most out of every prop firm. So these are 3 things that I did in order to maximize, the gains that I can make off prop firms, and basically just to make the most that I can off of prop firms. There's kids nowadays that are making thousands, if not millions, off of prop firms yearly. And those are kids that, they grew up with no money, or they don't have a big amount of capital to trade. So you think about it, basically you pay what, 800, 900 to, pass a challenge, and after they give you $100,000 to trade. So basically, if you blow the account, you're just losing $800 or $900. So the first thing is your risk management. And what I recommend traders is that you should risk a maximum of 1% capital on your account. Why is that? Because you guys know the truth about prop firms. There's a lot of rules that come with it, right? So if you have a $100,000 account, it's not like if you actually have $100,000. You could say that you have maximum $10,000. Because if you get to that 90,000 stage, then essentially, you've blown the account. So you don't really have $100,000. You have $10,000. But the good part about it is that if you do blow that account, it's not like you're losing $10,000. You're only losing probably $800, $900, which is the price of the challenge. So there's no need to see, that big number of 100,000 and start to get greedy, like, oh, I need to risk 2%, I need to risk 3%, I'm gonna make more gains. That's not how you should go. You should risk a maximum of 1%. Even 0.5% is okay. But if you have a strategy, that has a higher win rate, then personally, I would risk 1% per trade. If you have a strategy that's more risk to reward and has a lower win rate, then I would go 0.5% risk per trade, so you don't blow the account and you make sure that you're okay on that account. On the other hand, if you have a strategy where your win rate is higher, then I would risk 1%, because what are the odds that you lose 10 in a row? If you actually lose 10 in a row, that means your strategy does not have a high win rate. So risking that 1% maximum allows you to keep that account over time, have it for a long period of time, because going through the challenge again and again is a pretty annoying phase. When you're doing the challenge, all you want to do is just secure that live account and get to that live account, right? So manage your risk, don't over risk, don't be greedy, keep a 1% maximum risk depending on your strategy. If you're a risk to reward trader who has a lower win rate, go for a 0.5% risk per trade, which will allow you to stay in the game longer. And if you have a higher win rate, then risk 1% per trade, which will allow you to stay in the game longer as well. And another thing that helps with the 1% risk or 0.5% risk is that you're not going to hit that daily limit, which is another rule that all prop firms have. Most prop firms have a 5% rule that you can hit per day daily limit. So if you're managing your risk on the prop firm, it allows you to make sure you're not blowing that account or you're respecting the rules of the prop firm. The second thing that I recommend, multiple prop firms. So most prop firms, they allow you to have a max capital of 400,000, like FTMO basically, which according to me is one of the best prop firms out there, one of the most trusted prop firms out there. There's a lot of other prop firms out there also. Most of them allow you to have a maximum of $400,000 capital, which you can merge all into one account altogether, so you don't have to take multiple positions on different accounts. So let's say if you do have a $400,000 account on FTMO, risking 1% is now a different game, right? Because per trade, you're risking $4,000. But on a $100,000 account, 1% trade is $1,000 risk. So it comes down to the same thing on both accounts. You're risking 1%, but your profits are going to be higher, right? Because you have a $400,000 account. More capital means more potential for bigger gains, but it also means more potential for bigger losses. But if you know how to manage your risk, you'll be okay. Now, let's say you have $400,000 on FTMO and you have $400,000 on funding pips. That gives you $800,000 capital that you merge together, and suddenly now you have $800,000 to trade, which is a lot of capital. You can make a lot of money with those two accounts if you have the skill, obviously. But you can't really merge funding pips and FTMO together. But, if you're okay enough to take a trade on one account and then go to the other account and take another trade, then you should be okay managing two accounts, because on both firms you can merge your money together. But if not, you can look at different options to maybe have a copy trader, or have someone else take the trade for you, or different options basically to take the trade. But you know, generally you should be able to take trades on 2 accounts. If you really can't take trades on 2 accounts and you know you can only trade on 1 account, then $400,000 alone on FTMO is a lot of capital to start. And what you can do on FTMO is that once you make those profits, which is now going to be my third point, once you make those profits on FTMO, you can put them all into a personal account. Because the long-term solution, as much as I love prop firms, trading a personal account is always the best thing. Why? Because you can trade on your own rules. So what I recommend traders is that make those profits on a prop firm account and then put them into a personal account. Stack up that personal account, compound it as much as you can, and long term, you know, you're going to be able to trade that personal account. Because let's say you have the skill in trading, but you know, you only have $5,000 or $10,000 in your personal account. You know, risking 1% on that personal account, it's going to take you a long time to get to 100,000, to get to 200,000, which is not a bad thing, you know, because you get better over time and you know you can stack your capital over time, over the years. But what prop firms have done now is that they allow you to, if you have the skill, once again, they allow you to stack your capital at a faster rate if you're smart with the profits that you make. So you know, it's not just about making profits on a prop firm and then you know you go blow these profits on stupid stuff. If you reinvest those profits back into your personal account, that's a smart way to go about it to make even more money after. And another smart thing in the second point that we had, that was managing multiple accounts, start with $100,000 challenge. And if you pass that challenge and you secure your first payout, then you know, prop firms like FTMO that give you back the price of the challenge. Basically, your challenge and your account now is risk-free. So even if you blow it at some point, you know, you're not losing any money because you got the price of the challenge back with your first payout. So now when you get the refund from the first challenge, reinvest it back into FTMO, buy another challenge, and when you pass that challenge, buy another challenge. Now you're at 300,000. And when you pass that challenge and you know, obviously with your first payout, you buy another challenge, which gives you $400,000 capital total. And that 400,000 now is risk-free. So if you blow all those accounts, you're not losing any money, right? Because you got the payout and you received the refund for the challenge with those payouts. So that's the smartest way to go about prop firms. You know, reinvest that money back. You know, they often say in business, you know, the best thing is to reinvest the money back in the early stages. It's not to just make profit and, you know, go blow it right away on materialistic things, or, you know, you go pay yourself a big vacation right away. When you're starting off, the best thing to do is really reinvest that back into your business, into your trading. Keep stacking those FTMO accounts, keep stacking those prop firm accounts, keep getting your capital higher, and all the profits that you make, shift them into your personal account or shift them into a stock, shift them into something basically that's gonna make you money. And I'm not saying that you have to shift it all back into your personal account. You know, like they say, don't put all your eggs in one basket. If you have another thing what you can invest in, which, you know, is gonna give you a return, like a stock or, you know, a side hustle, something else where you can invest in and you're going to get a good return, and you know, you can invest those prop firm profits into that as well. And no, I don't think that, you know, prop firms are going to die soon. Obviously, you know, the rules are going to get stricter on prop firms, the regulations, I think they're going to get stricter, but I think, you know, it's just the beginning of the game for prop firms. I really think they're going to continue to evolve over time, and you know, they're making trading accessible for a lot of people now. So, you know, you got to go smartly about the way that you trade on prop firms. So if you like this video, feel free to subscribe, and you can drop a like too. I really appreciate it. You can follow me on Instagram and my X account, which I'm going to be posting in the bio down below, and our free Discord channel where we post setups on a daily basis. Thanks for watching.